Welcome back to Market on Close. I'm Caroline Woods. We have 8 minutes left in the trading day. It's time for the big picture. Let's welcome in the team from Charles Schwab. Cooper Howard is Director and Fixed Income Strategist at Schwab Center for Financial Research. Mike Townsend is Managing Director at Legislative and Regulatory Affairs at Charles Schwab. Cooper, Mike, great to have you both here. Mike, let's start with you. Biggest takeaways from this development between the U.S. and China? Escalation, or de-escalation, I should say, certainly seemed to be the expectation, but got a little bit more than maybe we expected here?
Yeah, I think we did, Caroline. And boy, what a day. I mean, we've had about 6 major things happen today that normally would be the biggest story of the day. But I'd certainly put this at the top. And obviously, the market reaction plays that out. But, you know, the big drop in the number, you know, I think people thought that we would see a fairly significant drop in the tariffs, you know, from 145% to maybe 80. That's the number that the president had thrown out. You know, to go to 30 and have the Chinese go to 10 in this interim period of 90 days, I think that's a big surprise to the markets and a big surprise to everybody. Now I think the hard work comes, right? What's next? You got this 90-day period. You know, doing a trade deal with China is like a months and months and months and probably a year or more effort. So they need to show progress. They need to keep kind of hitting some, I think, milestones along the way of these negotiations to keep the momentum going. But I don't think you can say anything, but this is a very important development, no question about it.
Okay. Cooper, I want to get your thoughts about what this could potentially mean for the Fed and why you think the 10-year yield is on the rise today. We're trading around 4.47%.
Yeah, I think identifying the specifics of a market move in a short-term nature, obviously coming down from the 145% to the 30%, like Mike had mentioned, that's pretty good news. But we are still in a relatively elevated time to where tariffs are kind of a inflationary impact and potentially slow on growth. So in terms of what it means for the Fed, Caroline, we still think that the Fed's likely to cut interest rates this year. But if we look at what the market is telling us, the market's telling us that they're likely to cut less than originally expected. So prior to this announcement, the market was pricing in about 3 to 4 rate cuts. They were more on the side of 3 rate cuts. Right now, they're pricing in about 2 rate cuts. So our expectation all along was that probably that 3 to 4 rate cut scenario was a little too aggressive unless we saw a significant slowdown in the economy via the labor market. So right now, priced for about 2 rate cuts, I think that that's probably appropriate. But like Mike had mentioned, a lot of the heavy lifting is going to have to happen, and there's a significant amount of things that can change going forward. So I think the Fed, for the time being, is likely to just sit on their hands, wait to see what develops in terms of the market and the economy, and then begin to react and begin to move from there. But again, we still do expect them to cut interest rates this year.
Okay, but not necessarily cut because the market is going into a recession, Cooper.
You know, I think that that's going to be a very difficult thing. And I think that ultimately it's going to be what happens with the tariff policy. Did they get rolled back even more? Again, it takes a significant amount of time to negotiate trade policies. On average, it takes about 1.5 years. We're going to try to do this in 90 days. That has the catalyst to create a lot of volatility, a lot of uncertainty in the market, and a lot of uncertainty in the economy. So it'll be an interesting thing to see, how do companies develop? What do they make plans? How do they shift things going forward? So that's going to be something that really I'll be watching and we'll be focusing on. Now, is our base case a recession? No, our base case is not a recession. We think that if the Fed does cut and we aren't in a recessionary environment, it would likely to bring the Fed funds rate back down to a more normal level. Because coming into this, the economy has a lot of steam. Right now, GDP on the underlining is running about 3%. The labor market still is relatively okay. Inflation, yeah, it has stalled out. We're going to get CPI tomorrow, so we'll see what that develops. But coming into it, there's some momentum. The concern, the question is, what happens going forward?
Okay, yeah. And Mike, to your point, you say the hard work comes next. It's also a big week in terms of tax reform on Capitol Hill. Fill us in on what we should expect on that front, because I think the big question is, will the tax cuts offset the impact of these tariffs?
Yeah, I think we're going to have to see, Caroline. The House Ways and Means Committee put out its tax proposal just in the last hour here. It's 389 pages, so I admit I haven't read it all, but you know, there's some good things in there, I think, that we expected. Extending all of those expiring tax cuts from 2017 The estate tax exemption is increased to $15 million. We got no tax on tip income for 4 years, no tax on overtime hours for 4 years. One of the sticking points clearly is going to be the state and local tax deduction cap. That's still it's raised from $10,000 to $30,000 in this proposal, but that's still not high enough for some of those Republicans that represent states like California, New York, and New Jersey that have high taxes. So I think that's still going to have to be worked out. And then there's a lot of controversy on the spending cut side, including big cuts to Medicaid. So this is all going to come to a head this week, and hopefully the committees will be able to get this through. And the House is looking on track right now to try to vote on this next week before the Memorial Day holiday. So that would be a big win, I think, for Republicans if that can happen. A lot of hurdles still to clear on the way, though.
Okay, Mike, happy reading tonight. 389 pages. Come back and bring us the Cliff Notes, if you will. Mike Townsend, Cooper Howard, thanks so much.